So stepping up here, let's take a look at number 5 on our list, middle of the list here, ALRM.com. ALRM. They've got revenue of $234 million, market cap of $1.26 billion. Interesting sort of a hybrid SaaS model they have going on here.
Yeah, they're a very interesting company. They're kind of on the forefront of the smart home, the connected home, where they put together a bunch of different partners, mostly on the security side, but increasingly one of the growth vectors is obviously smart thermostats, lighting, all of that stuff, and they put together all those partners so that you can kind of have a unified security solution for your house that you can control via the web wherever you are. And it kind of makes sense. Now, one of the things that Alarm.com has put together, both the technology and a lot of the partners to make it happen. There are going to be bigger players going into this. So the idea of Alarm.com as an acquisition target was, an acquisition of convenience. Google, for example, they want to do this. They want to be in the smart house. Amazon is already there with Echo and so forth. So maybe, Alarm.com is kind of a quick way, is kind of that quick buy or develop decision and just go, for this market, it's really important for us. They plop down $2 billion in cash. For 60% premium or whatever, right, over closing price, what are the shareholders going to say? No, and yet for $2 billion, they get a lot of value in terms of the future growth. Now, if they stay as an independent company, they're risking a lot of newcomers because there's going to be a lot of newcomers coming into the space. So that's kind of why we thought maybe that they not only that they would be interesting as an acquisition target from other people's perspectives, like the big acquirers, but also that their management would go, okay, it's time to cash out. So,
I would also add that Alarm depends on a lot of the distribution partners for their overall growth. I mean, they're partnered with the ADTs of the world to actually go out and sell their products. And if they're acquired by a larger company like a Google, for instance, or maybe even Amazon, well, these companies could kind of use their own company brand to actually push the products out themselves, and so the distribution channel wouldn't be as necessary. So it makes a whole lot of sense from a strategic standpoint for Alarm.
Those margins, yeah, you're right. I didn't think about that. That's totally true.
For Alarm to go ahead and get acquired by some of the bigger guys here, because there's a huge, there'd be significant margin upside to making a move or a decision like that, and it eliminates the dependency that they have on the distribution partners.
Mm-hmm. So just so everybody's on an even playing field here, Alarm.com, when I said it's sort of an interesting hybrid SaaS model, they have their software that they leverage, but there's also a hardware component, and then there's an installation component, hands-on, guys with wire cutters and screwdrivers actually mounting stuff in
to the house.
So
which is not the best part of the business model, but it's also it's only the initial part of the business model. So meaning that assuming that they install X number of houses, then once that house gets installed, then it's a recurring software revenue model, much higher gross margin going forward. Ostensibly, that's the deal. But you still don't. I mean, they're going to be in the hardware business for the next 5 years at least, if not more. And that's not the best place to be.
No, in fact,
but maybe if they get acquired by somebody, maybe that can be ameliorated through other partnerships or something like that. But no, you're right. I mean, it's you would like them to just be that software part of the business. Unfortunately, they still need to wire the house so that they can do what they're supposed to do. So
anyway. But that's where I think a partnership. I mean, we listed out here, Google, Amazon, potentially Apple, as well as a couple of PE firms that could take an interest there.
Right.
But for me, I look at Amazon and I go, this is a company that knows how. To build technology, manufacture technology, or acquire technology to move through their channel. And when you look at the technology that Alarm is putting in there, I see a lot of benefit from somebody like an Amazon kind of taking over that hardware aspect, really letting Alarm focus on the software side. And then, of course, you still have that installation side. But there is something that Amazon brings to the table here,
Echo.
And that is Echo, and the ability to really understand and support, sort of self-configuring tech. Google has that, similarly with Nest and some of the other products that they've brought to market. By the way, total side note on Echo, the the other day, you and I were talking about the incident with Echo, where somebody on TV, a newscaster, was playing around with Echo and said, Echo, play me this particular song, and somebody happened to be recording in their house, while
the television
video
was on.
with their little their iPhone, while the television was on, and it activated their Echo. And Alexa did play the song. So there's a whole level of
Echo, don't listen to the TV.
Yeah, exactly. There's a whole level of security that I think needs to be baked into into this model in general moving forward. But to wrap up, Alarm.com on number 5 pick, they are a member of the Samadhi 16 in the Samadhi Capital Partners client portfolio.